$500 invested in the S&P 500 in 1990 is worth over $34,000 today. Pause. But here's what nobody tells you. $500 in the right stocks from that same index would be worth over $180,000. Same starting point, same market, wildly different outcomes. The difference isn't luck, it's strategy. And in the next 9 minutes, I'm handing you the exact playbook to turn $500 into a wealth building machine using stocks you can buy before the market closes today. Let's get something straight. The S&P 500 has 500 stocks, but roughly 90% of its returns come from just 50 companies. That means 450 stocks are essentially dead weight. Or worse, they're dragging your portfolio down while you think you're diversified. Pause. This is why the guy buying index funds and the guy picking the right individual stocks can start with the same $500 and end up in completely different tax brackets. Now stop for a second. If you've ever bought a stock because someone on social media was screaming about it, this video is your intervention. Pause. We're going institutional grade today. Here's my 4-part filter. Number 1, free cash flow, yield above 4%. This tells you the company prints real money, not accounting profits. Number 2, debt to equity under 1.5, because leverage kills in downturns. Number 3, revenue growth above 8% annually. And number 4, a competitive moat that's widening, not shrinking. Run these filters on the S&P 500 and your 500 stocks become about 30. Run them against current valuations, and you get the stocks I'm about to show you. Stock number 1, and this is the foundation of your $500, is Alphabet, trading under Google. Pause. Here's a stat that should make your jaw drop. Alphabet generates over $70 billion in free cash flow annually. That's more than the GDP of 120 countries. They're sitting on $110 billion in cash with virtually zero debt. And right now, they're trading at roughly 20 times earnings while growing revenue at 13% year over year. The market is pricing this like a boring utility company, but it's actually an AI and cloud computing giant with a monopoly on digital advertising. You're getting $1 of value for about 80 cents. $200 of your $500 goes here. But wait, if Alphabet is so great, why isn't it already priced for perfection? Pause, because the market is terrified of 2 things: AI disrupting search and antitrust lawsuits. Here's the truth. Alphabet is the AI. They own the models, the data, and the infrastructure. Antitrust might force a YouTube spin-off, which would actually unlock value for shareholders. The fear is your discount. Stock number 2 is Broadcom, ticker AVGO. This is the pick and shovel play on the AI gold rush. Every data center, every smartphone, every piece of cloud infrastructure runs on Broadcom chips. Revenue grew 44% last quarter. Their VMware acquisition just gave them a software moat on top of their hardware dominance. And here's the kicker. They pay a 1.3% dividend that's grown every single year for over a decade. Pause. This stock has returned 1,800% in the last 10 years, and analysts still have price targets 20% above current levels. $150 of your $500 goes to Broadcom. Now here's where most YouTube videos would give you another obvious mega cap pick. I'm not going to do that. Pause. Stock number 3 is the one Wall Street doesn't want retail investors finding. Trane Technologies, ticker TT. Never heard of it? Perfect. That's the point. Trane makes heating, cooling, and refrigeration systems. Boring, right? Pause. Wrong. Global regulations are forcing every building on Earth to upgrade HVAC systems for energy efficiency over the next 15 years. That's a $200 billion addressable market, and Tron owns 25% of it. They've grown earnings per share at 19% annually for 5 years. Their backlog is at record highs. And they just raised their dividend for the 14th consecutive year. This is the definition of a wealth compounder hiding in plain sight. Final $150 goes here. So let me break down your allocation. $200 in Alphabet for mega cap stability and AI exposure. $150 in Broadcom for semiconductor dominance and income. $150 in Trane Technologies for industrial growth. Nobody's watching. Pause. 3 stocks, 3 different sectors, all passing institutional grade filters, all buyable with $500 and 0 commission on most brokers. Here's the part that changes everything. If these 3 stocks simply match their 10-year average returns going forward, your $500 becomes roughly $4,200 in a decade. Pause. But if you add just $100 per month, one dinner out, one subscription you don't use, that number explodes to over $22,000. That's not theory, that's compound math working for you instead of against you. The wealth gap in this country isn't growing because of secrets. It's growing because some people treat investing like a slot machine, and others treat it like a system. You now have the system. Pause. If this changed how you think about building wealth, subscribe and hit the notification bell. I drop videos like this every single week breaking down exactly how money actually works. One subscription, 0 cost, potentially life-changing information. I'll see you in the next one.